this yellow line has weakened. It does open the door for a breakout, although the breakout probably gets stopped pretty sharply at around 91 to 92,000.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now, guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Gareth Soloway breaks down tariffs, a $10 trillion money print, and why Bitcoin could hit $2 million. Big moves are coming. Let's watch and reveal what's next.
Nvidia, big bounce, guys. Big bounce. It's not done going down. I want to be clear on that. A great bounce, fantastic bounce. But again, if we look at yesterday's close, look at this low right here, right through here, and also look at this here. If we take this and we take like this pivot low right through here, you can see you kind of pierced that a little bit there. And then again, you have other levels here. But we want to just watch as we rally up here to see. I mean, do we go to this level right here? This would be a retrace into a level as well. What levels ultimately do we get to? But either way, that was a huge, I mean, to see NVIDIA bounce 19% yesterday, Broadcom bounced about 20%. Tesla was up, 22%. Here's Tesla. Now, by the way, Tesla is a great bounce, and I gave you guys this level for the last month. That was a huge, huge level. I want to be clear. Tesla can bounce more, but eventually it's going to go lower based on technical analysis. It still should go lower to the downside. All right, so just be aware of that. One level I'll be watching closely is this. This will be my next target on the downside. Let me get rid of this measured move over here. Major low from 2023, major low from 2024, and the next breakdown. And listen, I could see us rallying on Tesla back here to about 325 to 326, but at some point when we come down, this is your next target zone right down here based on technical analysis. All right, so again, just be aware of that. Notice also, and I want to show you guys this, see this flat bottom right here? Drag that out. Those two lines meet. That's going to be additional support right there. There even could be additional factors there that I'm not even seeing, just doing this in real time. Apple, again, huge bounce on Apple, guys. It filled the gap here. I had a short on Apple that I was out of the money on. I stopped out of that for a little bit of a loss, and I flipped it into a long, and then we banked a monstrous move yesterday on Apple. And it just shows you, like, I do take losses, but I manage my positions, and again, obviously able to manage and see the charts. The charts guided me to saying, you know what, it might be good to take a loss on Apple, but also flip it around to a long because we're likely going to bounce, and that's what we did right here. And I even talked about that with you guys about being long Apple, being long some of these other plays on this major move. Let's flip over to Bitcoin. Bitcoin today, small pullback right here. Look at where it went, right to the line that I've given you guys. So there's your down slope right there yesterday, and it's getting a small pullback. The positive is that in general, we've now hit this downsloping trend line a lot, right? All in here. You can go back here, here, and here, but really recently, all of these are hits. This means this yellow line has weakened. It does open the door for a breakout, although the breakout probably gets stopped pretty sharply at around 91 to 92,000. But again, it does potentially bode well for at least a little bit more upside in Bitcoin. All right. In addition, we talked about Ethereum yesterday. If we looked at that, it was right into this downsloping trend line, pivot low, pivot low, pivot low, and look at the bounce. Now it has to fight through this. It's a very tight wedge forming. Which way is it going to break? Up or down? Generally, downsloping wedges break up about 8 out of 10 times. That still leaves 2 out of 10 where it could break down. So just be aware, there's no easy 100%er, as I always say, in trading. It's all about probabilities.
As Bitcoin tumbled more than 5%, falling below $75,000, Michael Saylor broke his silence with just one word on X, HODL. In the middle of growing panic and heavy selling, Saylor's message was loud and clear. Stay strong and don't sell. His calm response reflects his long-standing bullish stance on Bitcoin, even as the broader crypto market turned red once again. Despite the drop, Saylor's company, Strategy, remains one of the biggest Bitcoin holders in the world. Just last week, they added $1.9 billion worth of Bitcoin, their largest purchase this year. With 528,185 BTC now under their belt, acquired at an average price of about $67,458 per coin, Saylor seems more confident than ever. The rest of the crypto market wasn't spared either. Ethereum plunged 6%, while Dogecoin 88 and Toncoin also posted heavy losses. Analysts warn of more short-term volatility, but Saylor's simple advice reminds everyone to think long-term amid the chaos.
Remember yesterday when I went over the 10-year yield chart and I said, guys, the 10-year yield spiking is going to be the one, basically Achilles heel to the U.S. and their trade war. And the reason is because all these countries we rely on to buy our debt. Not only that, but the more trade war and the weaker the economy is expected to go, the less even people that do want to buy our debt are going to want to buy our debt at the current interest rates. And so we saw, generally remember, this is really, really important. When the stock market falls, yields or interest rates generally fall. Because again, the idea is that as the stock market falls, demand for treasuries goes up, and that forces interest rates down. Instead, we saw yields going up instead. So we saw interest rates going up, which means demand for treasuries was dropping, right? And so that is the kicker here, to the point where you had a move on the 10-year yield from 3.86 to a high yesterday of 3.5. This is literally a crisis in the making. Okay. Now, a lot of people and even our president has said, oh, well, let's just have the Federal Reserve cut interest rates, right? Just, the Fed should cut interest rates, right? How many times have we heard that? It doesn't matter. I'm telling you right now, the Fed has very little impact. When the markets dislocate, the Fed has almost no impact. Remember, the Federal Reserve FOMC rate, that is the bank, what they lend to the banks. Now, generally in normal markets, the yields will follow that. But when they get dislocated and people just say, hey, listen, we're not buying U.S. debt, no way. Whether it's a result of the trade war and other countries saying, screw you, we're not going to buy this, or if it's a result of people just not knowing where the U.S. economy will be and they don't want to hold debt of the U.S., it doesn't matter. The Fed could cut rates a full basis, like 100 basis points, and it wouldn't matter. So just a couple things to understand about that, guys, when it comes to these interest rates.
Bitcoin's recent surge to $82,700 might not be the celebration bulls are hoping for, according to crypto trading firm QCP Capital. They're warning that what looks like a strong rally could quickly flip into a classic bull trap if China strikes back hard in the growing trade war with the U.S. after President Trump paused tariffs for most countries but doubled down on China. Markets rallied across the board, including crypto. But QCP thinks this relief might be short-lived. With China singled out, traders are bracing for Beijing's next move. If retaliation comes strong, the current excitement could evaporate fast, sending Bitcoin and stocks tumbling. QCP's trading desk is already seeing signs of caution, with market makers selling into the rally for May and June positions rather than buying, which hints they don't trust this pump to last. At the same time, there's an interesting twist. Some analysts see opportunity. Sina, co-founder of 21st Capital, pointed out that China's yuan is weakening fast, and history shows when that happens, money tends to escape the country. Some of it flows into gold, some into foreign markets, and a growing chunk finds its way into Bitcoin. With rising tariffs, slowing global trade, and shaken trust in traditional financial systems, Bitcoin is starting to look less like a hedge and more like a necessity. Still, caution rules the day. While some see room for Bitcoin to rise, others warn that a real lasting bottom may not be here just yet. Bitcoin is holding steady around $82,000 after bouncing back 8% from Monday's sharp dip. Trump's announcement of a 90-day tariff pause sparked the recovery, lifting the crypto market after a brutal start to the week. However, the mood remains cautious. Despite the price jump, Bitcoin spot ETFs saw another $127 million in outflows on Wednesday, hinting that big players are still pulling back. Now traders are debating whether this is a true breakout or just a dead cat bounce. The Relative Strength Index, RSI, points downward, suggesting bearish momentum could drag Bitcoin lower again. If sellers return in force, Bitcoin might retest support near $73,000. Still, there's hope. If Bitcoin can push through $85,000 and break above its descending trend line, It could open the door for a move toward $90,000 and even $95,000. For now, Bitcoin sits at a crossroads, and the next move could set the tone for weeks ahead. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.